Elon Musk. Not only is he the world's richest man, not only is he disrupting 100-year-old industries, not only is he going to put humans on another planet, he's done all this with not one, not two, but 10 children. Now that's impressive. So clearly with his knowledge of physics, he's figured out how to get more than 24 hours in a day. Now recently he sat down with Tucker Carlson from Fox News and discussed a variety of topics. And in this video we'll be looking about the ones about money, investing, and what is going on in the economy, including why the banking issue is not over and in fact worse than what most people think. Then the real estate time bomb that's about to go off. And then we'll finish with what the solution is, which could potentially avoid another crash in the financial markets. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, a few weeks back we saw the smaller banks in the US getting squeezed, but the problem is now over, right? Well, actually the problem is a lot worse than what most people think.
We have a situation here where it's not the canary in the coal mine has died, but the miners are starting to die too. So, Silicon Valley Bank collapsing overnight is one hell of a big canary. It's more like a turkey. I mean, it's not like some small fry thing. I think that there is a serious danger with the global banking system. There's a strong argument that if you were to actually mark-to-market the portfolios of the banks, the loans and whatnot, that the entire banking industry would have negative equity.
So there are much bigger problems going on beneath the surface when it comes to the banks. Essentially, with negative equity, this means the banks themselves are essentially underwater. And he says this isn't just a US banking problem, it's a global banking system problem. So clearly much bigger than people realize. And let's just be clear on the cause of these problems. It's the Federal Reserve raising rates at the fastest pace in history. And if that wasn't enough, it doesn't just end there. The plot thickens when we add to the mix the coming real estate time bomb.
So if you look at, say, commercial real estate like offices and whatnot, the whole work from home thing has substantially reduced office usage in cities around the world. I think San Francisco is like an extreme example, but I think it's on 40% vacancy. Even New York has, I think almost all cities at this point have record vacancies in commercial real estate. So commercial real estate used to be something that was a grade A asset, that if a bank had commercial real estate holdings, those would be considered the highest security, some of the safest, assets you could have. Now that is not the case anymore. One company after another is canceling their leases or not renewing their leases. Or if they go bankrupt, there's nothing for the bank who owns that real estate to go after, because they were, previously strong company, now dead. What do you go after at that point? So we really haven't seen the commercial real estate shoe drop. That's more like an anvil, not a shoe. So the stuff we've seen thus far actually hasn't even, it's only slightly real estate portfolio degradation. But that will become a very serious thing later this year, in my view. I think if we see, which we're likely to see, a drop in house prices because the interest rates are too high. And for most people, when buying a house, they look at the monthly payment. If you're a 30-year mortgage, the vast majority of it is interest. So if the Fed rate is high, you have a high base interest rate. Effectively, the price you can pay for the house drops because you now have to pay more interest, which means that if you've got a fixed monthly payment, you can now afford to buy a house for less money. It effectively drops the prices of houses.
Yes.
This is the kind of thing that tends to accelerate. So then you can get negative equity in the home market as well. And so if banks end up having loan losses in both their commercial and, well, they're definitely going to have loan losses in their commercial portfolio, but also in their mortgage portfolio, this is a dire situation.
And so the plot doth thicken. Not only are the banks getting squeezed by depositors withdrawing to money market funds to grab those juicy higher rates, now post-COVID, people have figured out that in a digital economy, you don't actually have to go into the office. So there's a commercial real estate issue building up in the background. And then finally, because of high rates, the next thing to come down will be residential property prices. So another issue for the banks to deal with as well. So add all this together and there's clearly more pain coming to the financial markets over the next 6 to 12 months. And so the big question is, what is the solution to this mess? Is there a way to mitigate or avoid another crash in financial markets?
There is a solution to mitigate the magnitude of the damage here, which is for the Fed to lower the rate. But they raised the rate again. Now, if I recall correctly, which important caveat, the last time the Fed raised rates going into a recession was 1929.
What happened next?
Yeah, the Great Depression.
But the concern is if the Fed drops rates again, then inflation will accelerate, and you can't do that in an election year.
So inflation is going to happen no matter what. If you increase the money supply, you get inflation. So there's not some magical cure for getting rid of inflation, except to increase the productivity, the output of goods and services. I mean, as the old saying goes, that there's no free lunch. So if you could just issue massive amounts of money without negative consequences, why don't we just make everyone a trillionaire? They tried that in Venezuela. How'd that work out?
Well, they had to eat zoo animals.
Right. It's not good, There's no free lunch. There's not some ability to issue money and not have inflation.
This week, Elon Musk has brought up some serious issues in the economy. He says the collapse of SVB Bank wasn't just a small deal, it was something of significant size. He thinks the smaller banks are in trouble and are in fact underwater right now. He says there's a commercial real estate issue still to hit, house prices are the next thing to drop, and that the last time the Fed raised rates going into a recession, it didn't end well. In fact, it led to the Great Depression. And finally, he says the solution to mitigate the severity is for the Federal Reserve to begin lowering rates. However, the Fed is doing the opposite, and their next meeting is scheduled May the 2nd, and they're on track to raise the rates again. So there you are, guys. Hope you enjoyed. Now, clearly, I would say Elon Musk is a bear right now. Do you think he's correct? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next video. Bye for now.